And joining me now with more is Harvey Flax, Director of U.S. Interest Rates Futures Business Development for Intercontinental Exchange, or ICE for short, and that's the parent company of the NYSE. Harvey, what are we seeing in the markets in terms of expectations heading into today's 2 p.m. decision?
Good morning, Kristen. Thanks for having me. The futures market's pricing in a 90% probability that the Federal Reserve will lower its monetary policy rate, Fed funds, by 25 basis points this afternoon, establishing a new target range of 3.5 to 3.75%.
And what is the Fed's view on shorter-term policy, the market's view of the Fed in that regard?
So the market's pricing in a 50% chance of an additional 25 basis point rate cut for the March meeting. That 50% goes to 100% by the June meeting. And further into next year, the market's pricing in a second 25 basis point rate cut by the end of the year at the December meeting.
Holistically, what does that tell us about the path forward for the Fed?
Slow. I mean, the market's... Again, we'll touch base on this in a few seconds, but there's been a lot of division at the Fed on the trends of monetary policy. There's a lot of data, perhaps, that they need to accumulate before they could really articulate what that path is going to be. We'll find out.
So to that end, certainly we saw the longest government shutdown in history happen earlier this fall. The government is now reopened, but that did delay some of the data, right, that the Fed would traditionally look at, government reports when it comes to making their decisions. Will that delay in data impact what we could see today?
The Fed has indicated that the delay of the inflation as well as the employment reports from the Bureau of Labor Statistics would not impact today's monetary policy decision. The Fed does receive internal data reports from its various Federal Reserve Bank branches around the country. It also receives data from third-party vendors, and that data will be used in context to formulate today's monetary policy decision. Yeah,
I know you've referenced the word divided, right? And we've been seeing that certainly in the press coverage in terms of where the Fed stands now. They have a dual mandate, of course, maximum employment and price stability through inflation on that latter point. So we haven't seen consensus during the recent meetings like we normally have. What are market participants expecting in terms of a potential consensus this meeting?
Yeah, there's certainly been a lack of consensus. Quickly recap over the last few meetings, you've had, I guess back in July, 10 voted to hold, 2 voted to cut 25. September, you had 11 voting to cut 25, 1 voted to cut 50. And of course, at the last meeting, for the first time in 6 years, you had dissent on both sides. You had 1 policymaker voting to hold, 10 voted to cut 25, and 1 voted to cut 50. Now, for this afternoon, economists believe that this division of opinion, so to speak, where those wanting to cut versus those wanting to hold, will only intensify, and that the hardening of these positions will be reflected in that vote, where they expect to see additional dissents.
Yeah. So we'll get the decision at 2 p.m. Eastern. We'll hear from the Fed Chair Jerome Powell at 2:30 p.m. Eastern in routine post-meeting remarks, right? What do you expect we could hear from Powell during that press conference?
Sure. Economists expect that he will continue to address, as he did at the last meeting, these dissents, this division on the committee itself, and where the future of that monetary policy neutral rate will be. Now, in addition to the monetary policy decision, the Fed is also releasing its quarterly summary of economic projections this afternoon, the SEP, otherwise known as the dot plot. And the chairman will certainly review the findings in that summary, and I am sure he will take many questions from the gathered financial press about the summary.
Yeah, so we will be watching rates closely, right? They impact all sorts of borrowing costs around the country and in some cases the world too. So what does it mean for mortgage rates, what the Fed could do when it comes to borrowing costs?
Sure. So the dominant mortgage in the United States is the 30-year fixed rate mortgage. That is significantly influenced by the 7 to 10-year sector of the U.S. Treasury yield curve. Monetary policy rates, they are short-term rates. They anchor the base rate. They are the base rate of the United States yield curve, and they govern short-term loans. Now, Generally, the trend when you have an active Fed, either raising rates or lowering rates, the monetary policy trend does influence the rest of the yield curve. It's not basis point for basis point, but there's certainly an influence. This time, since the last meeting, we've seen a divergence, very rare, hasn't been seen in a long time, where the yield on the 10-year note has actually gone up. It was 3.9% around the last meeting. It's about 4.2% now. And where the yield on the 10-year notes, mortgage rates follow. So the mortgage rates themselves have gone up. The 30-year fixed mortgage rates themselves have gone up roughly 15 to 25 basis points since the last meeting. And looking further afield, the ICE rate lock mortgage future for the May contract is basically saying that rates will be the same as where they are now, roughly 6.4%.
Harvey Flax, anything more our viewers should know ahead of this Fed decision today?
No, it's going to be very interesting. The vote itself is the dynamic at play right now, this dissent on the committee and what it means for the future of monetary policy.
Harvey Flax, ICE's Director of U.S. Interest Rates Futures Business Development at ICE, the parent company of the NYSE. Harvey, thank you.
Kristen, it's great to be here. Thank you.
Great to have you as always.